Hey all, welcome to ShareTrekc. This is Raj here. We are already into October, and with the PDUFA date for Exascel and Lowocell being in December, I have seen Bluebird jump 5% on Thursday, but despite that, CRSP jumped only 3.3%, and it seems to have some kind of resistance that it's trying to negotiate, because in the last 3 days, CRISPR has been ending up around the same level, about the highs and lows. So there seems to be a definite line of resistance out there. Hopefully it breaks it tomorrow. But I think that by this time, both Bluebird and CRISPR should have started moving upwards, given that the PDUFA date is in December. So I'm thinking that it will only take a positive press release for things to move. This is where small retailers like us do not have much of a sway. But if a big analyst were to just publish a article saying that PDUFA date is arriving and Bluebird and CRISPR should go up, immediately it will start going up. So we just have to be careful for that. I'm holding both CRISPR and Blue, and I will sell a covered call if the opportunity presents with good margins and a high price. And given that there is no other movement, I decided to look into DNA or Ginkgo Bio to confirm or dispel my fears about the stock. And I'm unable to draw a conclusion, but overall I'm feeling positive about Ginkgo. It seems that institutions have more confidence in Ginkgo, but as a retail investor who is looking at Zymergen going bankrupt, I need to dig a little deeper. With that said, let's get started. Here's what I think is going in favor of DNA and can kick the share price up very quickly. The geosecurity business, which is the Concentric subsidiary, which takes care of the security monitoring in terms of monitoring pandemics, looking at the airplane toilet waters and other things to see what are the variants that are happening. That element of the business could gain really fast, really big time if there is a resurgence of COVID. So I'm hearing news reports here and there which talk about masks coming back, which talk about a new variant of COVID which is not addressable by current vaccines, and there's a new vaccine that needs to be done because the spike protein has modified completely. So if those things turn out to be true, then this share will start spiking upward. And you know what? Other share that will go up is Pfizer. Pfizer has been dropping steadily after the initial COVID pandemic was over, and it could get a boost. Now, if we look at these two shares, we'll get an idea of what's happening. And there will be opportunities to tie up with new countries for the geosecurity business in the event of another round of COVID. Therefore, the revenues will be recession-proof in these cases. And despite the overall economic condition, if there is COVID, the money will be there and it will be paid for all these services. Don't get me wrong, I'm not rooting for another bout of COVID, but when we look at probability of profit or loss, we need to consider all eventualities. And despite enrolling many clients for the Foundry and database segment of the business, the economies of scale that should have kicked in the Foundry business has apparently not kicked in because the business is still not profitable. And I have great hopes for DNA in the API segment. So that's where the pharmaceutical ingredients will be prepared in a carbon neutral format. And I think that is one area where they would do very well. The contracts that Ginkgo has bagged in this area looks like a Hall of Fame collection and consists of companies such as Pfizer, Moderna, Novo Nordisk, Sumitomo, Merck, and Eli Lilly, to name a few. I think there'll be more. I didn't dig into it much, but these are the names that come to the top of mind. But overall, it seems like Ginkgo is a giant plane on an extra long runway. And the only problem is we don't know when it will take off. Once it takes off, it's going to be great. The management has not yet provided us with a clear date when the company will be profitable. Moreover, with more than $1 billion in cash, I think the runway for this company seems to be long, especially because it is debt-free. And but that does not mean that going forward they may not make any misadventure like they did with Zymergen, on which they spent 300 million, and now they are likely to spend another 80 plus million. So if they do those kind of things, the $1 billion can go away very, very quickly. So this company, I think, needs to start consolidating. It has expanded enough. It should start consolidating and start having economies of scale in the Foundry business so that it can build a moat around itself for against competition. Or else there'll be problems later on because other people can come into the business. So let us look at some data points, some charts, and see if we can draw any other conclusions or draw more confidence about this business. I'm going to show you a bunch of charts that I have taken from different sources, and we'll draw some conclusions from that. So first of all, if we look at this particular chart, you will find that a year ago, there were more analysts saying buy. There were around 5 analysts saying buy. If you look at the current situation, right, this is the current column out here, and it says only 2 are saying buy. So there is no strong buy, only 2 are saying buy. However, if you look at the sell has not increased. So basically what this tells me is that many analysts have lost interest in this company. And that's the reason why we have a less number of analysts talking about what to do with this company, because earlier we had around 8 analysts who had given ratings, and then it went down to 6 and then to 5, and now it is 4. So this is not a very encouraging trend for me, but the consensus analyst price target is 3.44, which shows an upside of 98.13. Elsewhere, I have seen an upside of 132 predicted. So high prediction here is $6, low prediction is $1.25, and average prediction is 3.44. And then if you look at this diagram out here, I mean this chart out here, so what we have here is the target by some of the analysts who contributed to that. So we have Raymond James with the outperform rating, and William Blair with the outperform to market perform rating, but no price target. But Raymond James thinks that the price target should be somewhere between $5 to $3.50. So that's a positive one out there. That's the highest, I think. No, then we have Berenberg Bank. Berenberg Bank says buy, and price target is $6, which is an upside of around 226%. So it's all over the place. It all depends on what kind of models they have and what assumptions they make. But again, it's not possible to draw a conclusion here. But if I go back to the previous chart, I think that the analysts are losing interest, and which shows lower momentum, and lower momentum is not good for the stock, in my opinion. So that said, let's look at this one, which is price to sales ratio. And the current price to sale ratio is 10.6 times, whereas the fair price to sale for the industry is 8.2. So from this point of view, it's overpriced, even though the share price is low. Then if you had to look at ownership breakdown, we have 50.6% of institutions still holding shares, which is a big percentage. Individual insiders are holding around 19.7%. I'll talk about them also, and there are a few who are holding lots of shares, and they constantly come out every month to sell their shares. We have hedge funds with 11% and general public with 9.4%. And if I was to look at the change of institutional ownership, it has been on an upward trend, even though the share price has been following. So this line that you see here is falling share price, whereas this blue bar, this green bars that you're seeing out here, these green bars are the holdings by institutional investors, and it has increased over a period of time, and right now it is at the peak of institutional ownership. And if I was to look at this particular chart, it's a put call ratio chart, and the green portion out here shows the bullishness, which is the call side, and the red, which is the put side, shows bearishness. And therefore, overall, the put call ratio is saying that there's a lot of bullishness in the market when you look at this section out here. which was somewhere between June 2022 and September 2022. So this was a nice position to be in. But if you look at the current situation out here, it's almost even Steven. So even the market is not very clear what to make of Ginkgo Bioworks. So that's what I'm thinking, that after looking at everything, there are two reasons why I think I will still stay in Ginkgo Bioworks. One is that in case of a pandemic, which is most likely, there can be a sudden spike in revenue and earnings, and that can push the stock price up significantly. And that can also catalyze by building up the cash in the company and giving the Foundry side of the business an extra long runway. That's point number one. And point number two is that there are these really big companies like Pfizer, Moderna, Sumitomo, Merck. These have all entered into collaborations with Ginkgo Bioworks. And again, if you look at the API side of the business, pharmaceutical industries need low emissions, and at the same time, they have to keep up with their production volumes. And it's a very expensive process to generate active pharmaceutical ingredient or API. And Ginkgo can do it much more reliably and faster and with lesser impact on the environment, thanks to their Foundry and the organisms that they have developed. So I'm expecting that that area of the business, once it takes off, is going to be phenomenal. And with $1 billion or more in the cash and a long runway, and the concentric business with the geosecurity business with a very good possibility of showing a spike or a pop very soon, I think that I would stay in Ginkgo. My target price to buy it is around 1.52. I have a standing order. I already have 2600 Ginkgo. I'm not putting too much of money into this because it's a very risky stock in my opinion. But at the same time, these small priced stocks, if you have larger quantities, you can do covered calls and make money out of it while you're still static. And also when the price goes up, you can make really good money out of it with very less risk, because you're not going to lose sleep over a small amount. So I already have 2600 shares. I put an order for another 2600. It's a standing order at 1.52. It expires on the 13th of October, and at that time I'll take a look at it. But in between, if there is any sharp fall, I might even go and revise the purchase price down if there is an opportunity to do that. So that's how I'm looking at it. And I think one can play with genomic stocks, provided you do your risk management. Don't put everything you got into one place. And again, friends, everything that I'm saying here is my thoughts and my ideas, not financial advice. So please do your own due diligence. But what I request from you is, like the last video that I had on Ginkgo, you guys shared really good feedback. That gives me an idea of pulse of the market, in the sense that you guys are also market participants. So please give me your feedback and your opinion after looking at everything that I have presented here. And let me know whether you're bullish or bearish. And that will be really helpful for me also. And with that said, I would like to end this video here. Thanks and have a great day. Bye for now.